Good evening, everyone. Welcome to the weekly webinar again. On behalf of Fullerton Markets, this is Wayne, Head of Research and Education. Warmly welcome, everyone. So as usual, the webinar will be divided into 3 segments. We'll look at what are the events for the past 1 week. And second segment, we'll look at what are the upcoming data, news, or events to look out for. And finally, we'll move on to the charts to look for trading opportunities. Feel free to type in your questions. I'll take the questions along the way. So for last week, I think there's not much of data. I'm going to highlight 2. The first one is, of course, the UK GDP. It came in better than expected. So this was the news Bloomberg report, and they highlight most of the contribution comes from services, as you can see from the charts below. So in any case, we know that the main driver of the sterling is not so much of data recently. It's more of Brexit and issues surrounding Brexit. So later we can look at what are the upcoming data that will affect UK and events that will affect the sterling. Of course, the next key data that was released last week was US GDP. Okay, the GDP came in at 2.9%, much better than the expected survey of 2.6%. So as you can see, the highlighted paragraph on this Bloomberg report, the data are in sync with the views of Fed Reserve policymakers that economy is making slow and steady progress. So what it means is that the data is according to what the policymakers are expecting. So later again, we'll move on to there are some very key data and events upcoming this week. This week will be very exciting. So besides the 2 key GDP, some of you may have noticed the oil price has been creeping downwards. Okay, of course, the main reason is because there's some so-called disagreement among the OPEC countries, as you can see over here. Again, in the highlighted section of the Bloomberg report, Iraq should be excluded from the production curve because it's embroiled in war, etc. So this was the reason given by their oil minister. And the next sentence says Russia refused again on Sunday to commit to joining OPEC in trimming production. That's very interesting, because I remember one of the webinar we mentioned that Russia is ready to join in to so-called scale back their production, and next moment they say they refused. So it's interesting. So at this moment, there's nothing confirmed on the production so-called trimming kind of deal. So that's why you see the oil price is still fluctuating. So at this moment, if you have seen our so-called research that was published maybe a few hours ago on our website, you will notice that one of our picks for this week is to short the oil on rally. So anyway, we'll go to the charts later on to look for to take a look at what happened to oil if you would like to. So just in case some of you are wondering why oil price has been dropping, so this is one of the key reasons. Next, we move on to very quickly to the second segment on upcoming news and data. There are really a lot of data and things to look out for this week. So of course, the first thing tomorrow, Tuesday, this calendar is from fxstreet.com, and the time is being aligned to GMT plus 8 time zone. So the first one is, of course, tomorrow 11:30 a.m. There is a Reserve Bank of Australia interest rate decision and the rate statement. The widely expectation is they will maintain their interest rate at 1.5%. So the trade suggestion, of course, is to trade on the surprise side of things. In the event that RBA surprised the market by cutting interest rate, so this is pending short on Aussie dollar in the event they surprise the market by cutting interest rate. Of course, at the same time, they will release their rate statement. At this moment, the most recent key data for Australia is the CPI, which is better than expected as well. So with that as a benchmark, we do not expect them to cut interest rate. I mean, logically speaking. And for the rate statement, we expect them to maintain their neutral bias, neither hawkish nor dovish. So that should give the Aussie some support against the counterpart, meaning if their rate statement continue to maintain their neutral bias and to have some optimism in the outlook, then we can expect Aussie to remain strong against other counterparts, with the exception of US dollar. Okay, because for US dollar, there's a lot of key data and also FOMC this week. So that's RBA for now. The next key data to watch out for is in the afternoon, 5:30 p.m. That is UK data, manufacturing PMI. So this is one of the key data leading up to their rate decision later this week. So this is key information for them to decide their policy as well. So far, the PMI has recovered pretty well after their referendum in June. The PMI actually dropped, but immediately it recovered. So it's a quick recovery. And since then, the PMI has been above 50, which means that the sectors are growing positively. So this is the suggestions for the manufacturing PMI, UK manufacturing PMI. There's two suggestions, so up to you to take your pick. You have to make a decision. I don't really suggest putting two pending orders for reason that if the market is very volatile, you may end up having to face the situation where both pending orders are triggered. Because sometimes when the news is out, prices move very fast, and it may trigger both your pending long and short order at the same time before you can remove one of them. So I do not really encourage two pending orders. So of course the decision is up to you. So the two suggestions, one is pending long, pound dollar if the actual data is greater than 56. 56 is even better than the previous number, which is 55.4. Market is expecting 54.5 for this time round. So if the actual number comes in greater than 56, it's possible to see a short-term rally on the pound dollar. Or alternatively, you can place a pending short pound dollar expecting bad number. So the suggestion here is if the actual number is smaller than 50. Smaller than 50 means it shows a contraction in the manufacturing sector. So that's the PMI reading. So 50 is if it comes in at 50, that means there's a stagnant, no growth at all. That means the sector have not grown. If the number is greater than 50, that means the sector has grown. If the number comes in below 50, that means the sector has shrunk instead of expanding. So that's how you read PMI numbers. So that's the UK manufacturing PMI. We move on to Wednesday. So Wednesday, the key data, of course, is also UK PMI, but this one is a construction PMI. So construction sector shows whether the domestic economy is doing well. So if it's doing well, the construction sector should expand. So this is another key PMI to look out for. Construction PMI on Wednesday 5:30 p.m. So again, there are two suggestions. One is a pending long pound dollar if the actual number comes in greater than 53. And again, a pending short pound dollar if the actual number comes in smaller than 50. So take your pick whether you want to put a pending long or a pending short. So the criteria is as suggested. Next, on Thursday will be a big day. Of course, two major central bank interest rate decisions and their official statement within 24 hours. The first one, of course, is FOMC. So market consensus is they will maintain their interest rate for now. Of course, later we'll move on to the next event that is affecting US, which is their presidential election around the corner on the 8th of November, which is next Tuesday. So with a big political event coming up, we do not expect the Federal Reserve to make any changes to their interest rate, at least for now, or any changes to their monetary policy. So of course, there's always surprise in the market, you never know. So the suggestion over here is to put a pending long dollar yen in the event they raise interest rate. They surprise the market by raising interest rate. So this is a suggestion, and the rate statement decision is at 2 a.m. GMT plus 8. So later the day at the night, Thursday night will be the Bank of England interest rate decision. Of course, the suggestion here over is a pending short pound dollar in the event that they slash interest rate again. So the criteria is if the interest rate is less than 0.25%. Or, as you can see, there are a few data releasing at the same time, 8 p.m. on Thursday. The first one is interest rate. The second one is their asset purchase facility. So in the event they did not slash interest rate, but they expand their asset purchase facility, it would cause the sterling to weaken as well. So this is all criteria. If Bank of England slash interest rate, or if they increase their asset purchase facility to more than 433 billion pound, or in the voting to slash interest rate, market is expecting out of the 9 members, 8 members to vote unchanged and 1 member to vote for rate cut. This is what the market expected. But if the actual vote result is 7 members voting to keep the rate unchanged and 2 members vote to cut interest rate, then it may cause a slight drop in the sterling as well. Of course, if there are more members voting for rate cut, it will result in a bigger drop of the sterling. So this is another piece of data to look out for. So on Thursday night, beside the interest rate, there's also the asset purchase facility plus the voting result to look out for. So this will be a pending short pound dollar suggestion. Finally, we move on to the last day of this week, Friday, 4th of November. And the key data to watch out for, which I think a lot of traders, investors, and the market will be watching out for, is the non-farm payroll, because this will be the second last non-farm payroll for the year, and there will be one more in December before the final FOMC decision in December. So market consensus is 175k. So the suggestion over here is to put a pending long on dollar yen if the actual number comes in more than 180k. So it is widely speculated if the number is more than 180k or so, it is almost confirmed that Fed will increase their interest rate. So this is the market expectation. So the suggestion is if dollar yen is greater than 180k, if the non-farm payroll is more than 180k, this is a suggestion, put in a pending long for dollar yen. Market may start to price in a rate hike towards end of the year. So these are the data or news suggestions for the week. And finally, of course, there's a very big event coming up next Tuesday, which is the US presidential election. So of course, these charts and pictures are extracted from the website telegram.co.uk. It is a UK website. So they have quite interesting pictures. If you want to, you can go to the website and Google US presidential election, and you see all this so-called poll result is being updated almost regularly. So based on this picture, what it is telling us is Clinton has a slight edge over Trump in winning the election. So even for the poll, on the left hand side you see the blue line and the red line, and it is changing. As you can see, it fluctuates like the market. So when the blue and the red meets, that means the chances, it is a close fight. It's either 50-50 chance. But if the line starts to diverge, then of course whichever is higher will have a higher chance. So over here, the blue line represents Clinton, and the red line represents Trump. So at this moment, Clinton has a slight edge to win the election. Of course, if you Google, you'll find a lot of interesting websites betting or giving the odds of each of them winning. So of course, for trader, our main concern is, what has the election got to do with the markets? Of course, it has quite a fair bit of impact on the markets. So because whoever got elected, the policies or the directions that they're going to hit will affect not only political side, how the country is run. Of course, it's also affect the economy side and the financial side as well. So at this moment, if based on the market consensus, if Clinton wins, it is sort of favorable for the US economy. Whereas if Trump wins, then the market is expecting some policies that he will implement may not be so favorable for the US. So that's for now. But of course, for the US dollar, if you look at it, I still feel that the Fed rate hike will have a bigger weightage, regardless of whether Clinton or Trump wins. I think the Fed has to decide when to increase their interest rate, and I don't think they will base their decision on who is their new president. They will base it more on data to decide whether to increase interest rate in December or not. And that will play a big part in affecting the US dollar, definitely. So of course on the political side, that there's a lot of interesting speculating and things like that. I shall not talk about it. So let's move on to the final segment of the charts. So before I do that, a gentle reminder, it is still an ongoing promotion on our site, the accelerator. It has been very well received by our clients and traders. So a lot of them are claiming this bonus. So we decide to keep the promotion alive. So for those of you who have not taken advantage or have not opened a live account with us, feel free to do so via our website. And you can go to our website, fullertonmarkets.com/promotions, to look at the terms and conditions and how much you can get out from this accelerator bonus. Okay, we move on to the charts. Okay, last week we had a break. I had a break. I was traveling. So this was, feel free to type in any currency pairs or symbols that you want me to look at, and the time frame as well, while I take a few minutes to go through the 5 charts that we have talked about 2 weeks ago. The first chart is basically pound dollar. So my comment is to suggest to use a news trading strategy for pound dollar for that week, because there's quite a few data releasing, and I've given an alternative if you've known of any scalping strategy to apply it for that week. The next currency pair is basically dollar Swiss franc. So the red dotted line is the time of the webinar. So I mentioned that if the price retraces back to the support around 0.9860 and fail to close lower and bounce up, that would be a good opportunity to go long. And this is a very good example over here. Let me zoom in. Why I personally like to look for candle close. As you can see over here, you see the long tail going down. So for traders who doesn't wait for confirmation or candle to close, they may be in a hurry to jump in for a short trade. They may think that, oh, the support has broke. They want to run after the market, so they decide for a short, only to realize the market reverse very quickly. So usually I personally prefer to wait for a candle close and a confirmation before going in. So in any case, did not really happen. The price shot down to the support, went down further but did not close and shot back up again. So that's the dollar Swiss franc. Next is the silver. Silver, my suggestion is to apply range strategy to trade within the range where the red dotted line is the time of the webinar. So I have highlighted the range to be 17.80 and 17.20. Prices has still failed to really break out from the range, although price is slowly creeping upwards. But do take note, if there's any sign of increasing chance of rate hike and there's a strengthening of dollar, then the silver may start to head downwards again. So that's the silver. Next chart we looked at is actually dollar yen. Let me put a vertical line. The previous webinar is on the 17th. This is about the 9 p.m. candle. So the red dotted line is where the time of the webinar. So suggestion is apply news trading. So if my memory serves me right, we have talked about some trade suggestions to trade the dollar yen for that week. And also for those of you who have known some scalping strategy to get a few pips and get out, you notice there's no strong trend for dollar yen 2 weeks ago. Of course, last week there's a trend on the dollar strengthening on rate hike expectation. So that's the dollar yen. And finally is the gold chart that we looked at. And again for gold chart, I have marked the range of 1263 and 1250. 1250 and 1263. This was the range marked 2 weeks ago. And I mentioned that possible to go long once candle closes above where the blue box is, possible to go long. So prices has been hovering after that for pretty long time, two weeks or 1.5 weeks before it shot up briefly towards end of last week. So you will notice the previous resistance of 1263 is now becoming the support. Okay, 2 weeks ago I mentioned about this resistance around 1263, and 2 weeks thereafter, after price broke above, it has become the support. This is what we classically call it as area of conversion, where the previous resistance becomes support or the previous support becomes resistance. So if you have followed this suggestion to take a long trade, hopefully you have at least gotten out at break even. So those were the charts that we have looked at 2 weeks ago. So let's move on to the upcoming week, and let me check out the suggestions or the requests on my screen. Okay, the first request is actually the Nasdaq H4 chart. Okay, let me open up the Nasdaq. Okay, this is the current candle, Nasdaq. Okay, for the Nasdaq has been in a very pretty big range for now. Very big range. For this week, the FOMC and US data will have a slight impact on Nasdaq. So if you decide to do technical trades on Nasdaq, be aware that be aware when the FOMC and the US data is coming out, because once they are released, the market may not respect, or the price may not respect the technicals as much. So of course, when there's a rate hike expectation, it is not so favorable for the equities, because when interest rate is increased, technically speaking, the cost of business goes up. So it will definitely have an impact on company earnings, which will affect the stock market. So if there's a rate hike speculation, then of course it's possible to see the Nasdaq going down. And of course, if the data is bad and markets start to scale back possibility of rate hike by end of the year, we may see a slight rally in the Nasdaq. But towards after end of this week, towards the early of next week, I think the Nasdaq will be waiting for a US presidential election, and we may see selling off in the market because investors may want to cut down their risk, so they may start to release off their position in the equities market because no one will be 100% sure of what the election result will be. So for the investors who are more conservative, they may start to scale out some of their investment in the US stock market. So we could possibly see some selling off in the stock market prior to a US election, which means it's this week. And after that, after the US election, of course, if Clinton wins, then possibly we could see the Nasdaq rally. Not only the Nasdaq, the Dow Jones as a S&P as well. These three US index, I would expect them all three to behave similarly in the next 1 week until the US presidential election. So that's Nasdaq. So for those of you who are trading the H4 chart especially, I don't think I will use technicals to trade the Nasdaq for this week, because I expect the data and events to drive the movement more than technicals. But of course, if you are talking about lower time frame, you are trading the 5-minute chart, 15-minute chart, 30-minute chart, then of course you can still apply your technicals to take a very, very short-term position. So that's Nasdaq, my view on Nasdaq. The next request on my screen will be a pound yen chart. Okay, for pound yen, chart. Okay, what is the time frame that you want me to look at? Okay, never mind. I'll just for pound yen, this pair, there's two major central bank so-called announcement that will affect this pair. One is Bank of Japan. Just now I did not highlight about Bank of Japan because they don't have a specific time. They always put a tentative time to when they're going to release. So the time of the release is actually on Tuesday. Okay, let me show the screen again. Yes, this is the Tuesday calendar. So which means tomorrow, Bank of Japan will release their interest rate at 11 a.m. So of course, it may not be exactly around that time. Usually, sometimes they differ slightly, especially their press conference. So most important for this Bank of Japan, as people are not expecting them to slash interest rate or whatever. What market is looking out for, whether they will do something towards the end of the year. For those of you who have read our research, we have mentioned a bit on Bank of Japan as well. We do not expect them to do anything because it seems that they are waiting for Fed to take the lead they are waiting for Federal Reserve to take action first. So they are like watching or waiting for them. At least that is what we think they are doing. So of course, whatever they announce tomorrow will definitely have an impact on yen. If there's a disappointment in what they are saying, or there's no hints of any further easing or plans to ease, then of course it's possible to see the yen strengthen. That means the pound yen to go down. Then of course that is after tomorrow, and on Thursday will be BOE. So depending on BOE so-called bias, what is the BOE Governor Mark Carney going to say during the rate statement? Is he ready for more easing, or he's optimistic of the economy outlook? So depending on what he is saying, definitely that will have an impact on sterling. So if he maintain his bias and emphasize on the need to ease further and emphasize on the possible risk of Brexit, then possible we could see the pound yen dropping further again. And of course, if in their inflation report or in their rate statement they are slightly optimistic of the economy outlook, even though they are aware of the possible Brexit risk, as long as there's some optimism mentioned in the report, that could result in the brief rally in the sterling, meaning it's possible to see the pound yen going up in short term. And why do I say short term? Because no matter what happens, no matter how good is the report, investor traders will still be concerned with the possible impact from Brexit, because at this point in time no one knows or no one is aware of what kind of impact will it bring to the UK economy. So there's a big question mark, and when there's a big question mark, traders and investors will be cautious in buying sterling. So they may buy for short term, but once they see profit, they will start to wind down their long position. So there's sterling yen, a lot of I would say fundamentally driven kind of trade, especially for pound yen. Similar for pound dollar as well, because we have all their central banks making major announcements this week. So it is not just you and me who knows about this. Whole world knows that Bank of Japan, Bank of England, FOMC is having their interest rate announcement. So a lot of traders, investors may be sitting at the sideline waiting for news or data before they jump in to take positions. So of course, in a very short term, that there are definitely still traders who are trading the minute chart, 5-minute chart. They may be still trading the market and getting in and out within half an hour or so, taking like 10 pips, 15 pips out from the market. So for pound yen, it is definitely in a consolidation state over here, waiting for some things to happen, or waiting for central banks to give them some direction whether to go long or short. So on the technical side, maybe I highlight these two areas to help you make your trading decisions. Okay, the first one is 128.30 thereabout, and the support is 126.30. So from now until tomorrow, it is likely to maintain in this range bound. So of course, if Bank of Japan is disappointing or there's no exciting announcement or easing plans, then possibly we could see the pound yen heading towards 126.30. And then after that, it will be Thursday, depending on what BOE decision is. So that's sterling yen. Okay, the next symbol will be euro dollar H4. Okay, let me just open up the euro dollar H4. So this is a euro dollar H4 chart. Okay, the daily chart, as you can see, is predominantly on a downtrend. Prices is steadily heading downwards. So with I think the main reason, of course, is rate hike expectation. So on a H4 chart, you have seen the market moving downwards. The dollar has strengthened quite a fair bit in the last 1.5 months or so, and it is still moving downwards, and it is definitely possible to see it heading towards parity once this week, if the possibility of a year-end rate hike increases based on the non-farm payroll data. So I guess some of the attendee has been reading Mario's book or have attended his program previously. So one of Mario's most frequently indicator is actually the stochastic. So this is a technical trade to go short once the stochastic goes above 80 and comes back below. So this is a technical short trade. So of course for this week, we know that FOMC is on Thursday, and today is Monday. It is possible to still take this technical trade, but most likely you would have to manage your positions once the day draw closer to FOMC. So if the price really move downwards before FOMC, good for you. You can it'll be easier for you to manage. You can either close out your positions, take the profit, or you can shift your stop loss to protect your risk and to ride a possible downward movement if the FOMC is more hawkish than expected. So based on whatever strategy mentioned in Mario's book, this is the time to short. And chances is the stop loss will be somewhere here above the last high, and the immediate support is here. Okay, around the round number of 1.0860. So referencing the last high, a stop loss over there, and before it hits the support, that will be the take profit. So this is almost a 1:1 risk reward kind of trade. So of course this is a short trade. Okay, so this is a euro dollar short. Okay, so this is comment. Remember to manage your position closer to FOMC. Okay, so that's euro dollar. The next request. Dollar cat H4 chart. Okay, dollar cat. Let's look at dollar cat. Okay, this is the dollar cat. So as usual, I will open up the oil chart as well, since we are looking at the dollar cat. So this is oil chart and dollar cat chart. So oil is heading downwards. So in our report, we expect the downward move to continue. Over here, it has been making lower highs and lower lows since last week. So of course, the main reason is disagreement among the OPEC nations. So unless there's a fresh news coming out saying that the disagreement has been resolved, more countries are joining in to so-called limit their production, it is possible to see the oil continue to move downwards, maybe towards the $46 region. So currently it's about $48.40 per barrel. So unless there's some concrete or firm news that more countries decide to join in with the production to limit their production, it is quite unlikely for oil to head past 50 again. So since with that being said, that means oil price is likely to remain weak or even weaker. So if oil price continue to weaken, that means it is possible to see the loonie continue to weaken as well. So that's only one part of the story for dollar cat. The other part, of course, is since it is paired against the US dollar, again FOMC Non-farm payroll will have an impact on this pair as well, not just oil prices. So as you can see, in the near term, the loonie is like in a very interesting channel over here, creeping upwards. So if you ask me to trade the dollar CAD, either I prefer to trade oil if I expect oil to weaken. So instead going long on dollar CAD, I would rather short oil. If I'm expecting oil to weaken, I'll look for opportunity to short oil. And if I'm expecting FOMC or rate hike expectation to strengthen dollar, I would prefer to trade the dollar yen or the euro, or short the euro dollar instead of trading it on a dollar CAD. So that's my comments for dollar CAD. If I expect oil to weaken, prefer to short oil than long. So this is my comments. So if I expect oil to weaken, I prefer to short oil than long dollar CAD. So if I expect USD to strengthen, I would prefer to short euro dollar long dollar yen. Oops, not enough space. Okay, the reason I'm typing this so it's easier to review in future webinars. Okay, so this is my comments for dollar CAD. If I expect oil to weaken, I prefer to short oil as compared to going long on dollar CAD. So if I expect USD to strengthen, I prefer to short Euro USD or USD JPY as versus going long on dollar CAD, because the movement will be more straightforward in euro dollar and dollar yen as compared to dollar CAD, because dollar CAD there's still consideration on oil prices, on the loonie economy. And some background information: the Canada economy has a close relationship with US economy. So sometimes when there's positive news out from the US, investors or traders will treat it as a positive news for Canada as well. So this is my preference at this moment. So let us look at the next suggestion. Aussie Kiwi. Oh, this is an interesting pair. Aussie Kiwi. It is mentioned in our weekly research as well. Aussie Kiwi. Let's look at Aussie Kiwi. So for Aussie Kiwi, of course, the big news is tomorrow. Very fast, RBA. So in our weekly research, we basically highlight this support over here. And the resistance is actually on top over here. Missed by a few pips, never mind. 1.0595. Resistance is about 1.0750. So this is Aussie Kiwi. And a very nice range, up, down, bounce up. So this could be a... Of course, over here could be a nice range trading kind of enter long, very simple kind of trading. You can put a stop loss just below the support, and then your target could be just before it hits the resistance. So this is on expectation that RBA is going to maintain their neutral bias, hopefully to mention some optimism in their outlook as well. So if that's the case, it is possible to see the Aussie strengthen against the Kiwi in near term. Main reason, of course, if RBA maintain neutral bias, we know that RBNZ is on the dovish mode. So if you see there's a so-called difference or divergence in terms of where the policy makers are heading. RBA is neutral, RBNZ is dovish. So you see a divergence. So when RBNZ is dovish, it will result in a weak Kiwi. So relatively, if RBA is neutral or even hawkish, it don't need to be hawkish. As long as RBA maintains neutral, Aussie will strengthen, is likely to strengthen against the Kiwi. So at this moment on the technical chart, it is close to the support, or nearer to the support as compared to the resistance. So if RBA maintain their neutral position, it is possible for Aussie Kiwi to hit back up towards the 107.50. So that's the Aussie Kiwi trade. You can go long, expecting this range to carry on. So that's the Aussie Kiwi chart. H4 chart is a nicer range as compared to the H1 chart. So if you look at the H1 chart, chances is we may be thinking to go short instead of going long, because in the near term H1 downward movement is still very strong. But looking at the bias of the two central banks, I personally prefer to look to go long instead of short. So this would be the suggestion. Aussie Kiwi to go long. The risk reward is slightly favorable for us as well. 60 pips versus 90 pips. Okay, so that's the Aussie Kiwi. Okay, let me look at the next request. Okay, dollar CAD, euro dollar, we have looked at it. There's a feedback saying that the signal came slowly. I guess that one will depends on the location that you are located. But no worry, if the live session you find that there's some lag in terms of picture and voice, the recorded version will be uploaded to Fullerton Suite within the next few hours. So usually it will be uploaded by midnight on Fullerton Suite, and you can access it either immediately or you can watch it tomorrow morning. So no worries if you find that there's a time lag. We will upload as soon as possible within the next 2 hours, 2 to 3 hours to Fullerton Suite. For those of you who has a live account with Fullerton, you can log into Fullerton Suite, click under videos and the section called Fundamentals Made Simple. You will be able to access all the past recordings of our weekly webinars. Okay, so let's move on to the next request, which is Aussie dollar. Okay, Aussie dollar. I know some of you are looking out for trade suggestion or trade ideas, but this week is really a bit, I wouldn't say a challenge, but it's just particularly this week because it's just too many major events, central banks announcing policies, interest rates, and key event coming up early next week, the US election, and also a lot of data that will affect how the policymakers are going to decide their policies. So a bit on a challenge to look for technical trades, because in my mind I'm always looking out for fundamentals, because not well aware that this week is really data and central bank policies heavy week. So in any case, let's look at Aussie dollar. Aussie dollar has very much, just looking at this chart, is like a limbo rock. No clear-cut uptrend, downtrend. It is like a tug of war. Aussie is pretty strong since RBA maintains a neutral mode, whereas on the other side is Federal Reserve rate hike speculation, whether they're going to hike interest rate end of this year or not going to hike interest rate end of this year. So with all these reasons, that's why you see the Aussie dollar, no clear-cut trend. It's like the bull and the bear is on the par fighting each other. So for tomorrow morning, if RBA maintains a neutral zone or neutral tone, and possibly we could see Aussie dollar heading upwards slightly. Why I mentioned is only slightly because they have been, in the last statement, they are on a neutral zone as well, neutral tone. So if they maintain, at most the Aussie may rally another 30 pips higher. But after that, after 2 hours, I would say the next thing on traders' mind will be looking at US data. That's how I as a trader would think. If I trade tomorrow morning RBA interest rate or the news, after the news 2 hours later the effect more or less will be priced in, and as a trader I will look forward to the next data or the next news, which would be the ADP non-farm payroll, followed by FOMC, and finally the last on Friday, the final official non-farm payroll. So for Aussie dollar, if you ask me again, it's all data and policies driven for this week. Okay, the last but not least, the request on Pound CAD H1. Pound CAD H1. Okay, this is Pound CAD on H1. The reason of Pound CAD going up, as you can see, is very much on the Canadian dollar weakness. It is not so much that the sterling is very strong. So because of the drop in oil prices, it caused the weakness in the Canadian dollar. So that's one reason why Pound CAD is going up. So for this week, towards Thursday, would be BOE, interest rate announcement and their rate statement. Of course, if they are hawkish, Pound CAD will continue to go up. If they are dovish, then we may see the Pound CAD reversing downwards. So again, you see that on the Pound CAD chart, it doesn't really gives you, on a H1, doesn't really show very nice support resistance range or whatever. So a lot are being driven by spikes. What do I mean by that? You will see something like this. Okay, one moment you see the price shoot down, next moment it pushed back up again. And a very strong bear, and next moment the bull fight back halfway through again. And this is another instance, a very strong candle down, but there's no momentum to carry on, very interestingly. And next moment prices fight back again. So you see a lot of such instances. You see a long, very strong bull candle, and then next moment price fights back again. So this is a very interesting phenomena, as you can observe on the chart. So with all this sudden movement and then price fight back, you notice that it doesn't really follow much of a support resistance. So it goes to a decision region, but it failed to continue with the decision. So it is like, I have decided to go up, but how should I say? I'm trying to think of an analogy. Okay, it is like taking a leaf. So you go in a lift, you have make a decision. Okay, I want to go to the 5th floor. So you press the 5th floor. So as the lift is going up, of course, the technology of the lift doesn't allow you to reverse it. But picture this: you press the 5th floor, and as the lift is going up, 3rd floor, 4th floor, even before you reach the 5th floor, you decide, oh, I don't want to go to 5th floor. You press, I want to go back to the 1st floor. And the lift immediately go down. So this is the kind of situation that I observe from the chart. So for the price action traders, just by looking at charts, sometimes you can read certain stories. So if I read these kind of stories, it is telling me that the market is indecisive. I can't make up my mind whether I'm going to go up or I'm going to go down. So I can go down halfway through, I change my mind. I go up halfway through, change my mind. So this could be a quite tough so-called chart to trade, but this kind of chart will be favorable for short-term counter momentum trader. Short-term means if they go to a lower time frame, 15-minute chart, 5-minute chart. So they look for counter momentum. So when prices is going down, they look for the bottom to buy, or when it's going up, they look for the peak to sell. So if there are traders who are applying this kind of strategy during this time of sterling CAD, I would say they should be quite profitable. So for those of you who want to trade the dollar CAD just by looking at the price action, possibly you could, if you have known of such strategy, possibly you can look for or employ such strategy on the pound CAD. When you see a sudden spike or a long candle, whether it's a bull or a bear, immediately at the end of the next candle, at the start of the next candle, you do the reverse. We can come up with a new strategy immediately. So anyway, pound CAD for this week, it looks like it will still be hovering on the sideways range until Thursday BOE decision. I don't think that there will be any oil news that will impact or weaken the sterling further. There's no official meeting or discussion scheduled by OPEC. So unless there's rumors or unofficial comments being made. But that kind of thing, nobody know, and no trader will have a crystal ball to tell you what or when it will happen. So at this moment, the only thing we know is Bank of England that will affect the sterling CAD. From now until Thursday, if you ask me, this would be the range that I expect the pound CAD to respect. So 1.6380. And about 1.6230. Okay, this is the range from now until Thursday. So you can apply some range trading to take some short-term trade on pound CAD. Until BOE interest rate and inflation report. Okay, there's the BOE inflation report, the interest rate, and the rate statement. Okay, so all these are what the traders will look out for to get ideas of what the central bank is thinking or going to do. So inflation report is basically like a outlook report for UK. So The central bank will assess the situation to see the prospect of inflation or how well their economy is expected to do, their growth forecast, etc. So that's pound CAD. Okay, we have run through quite a fair bit of charts. Of course, if you ask me, the key thing would be the central bank announcements this week. So we have come to the end of the weekly webinar again. I hope that you all have enjoyed the session and whatever I've shared is good enough to set you up nicely to trade profitably for this week. So on behalf of Fullerton Markets, this is Wayne signing off. Thank you everyone for your kind attention. Good night and bye-bye.